Michael Burry, the legendary investor from The Big Short, and more recently one of the only institutional investors who was long GameStop long before the squeeze, has just come out with some blistering reviews of trading apps such as Robinhood and Webull, and has pointed out that while they might seem to be made for the underdog investor, they are in fact managed by Wall Street itself. So today I will look at these claims made by Burry and how Robinhood and other trading apps actually make their money, so stay tuned. Hi everybody, welcome back to The Contrarian. For those of you who are new here, my name's Logan. I really like to talk about overall success and investing, and most of all going against the crowd within the investing world. And so if you like these kinds of topics, consider subscribing to this channel, and I'll also make a disclaimer that I'm not a financial advisor, so none of this is to be taken as financial advice. So to get started, let's look at a couple of the tweets Burry put out in which he refers to these trading apps as nothing more than a glorified casino. And for those wondering why I'm only looking at his tweets, it's because Burry basically doesn't do any interviews on major news networks. So he's kind of a legend who says very little, but when he does say something, which is usually on his Twitter account, people pay attention. So just a few days ago, he tweeted about Robinhood. If you do not use Robinhood, you have to see it to understand what gamification of stocks and options means. So here it is. If this looks like a serious investing app to you and not a dangerous casino, fun for all ages, you have been gamified. So yeah, he really points out how the user interface is just very, it dumbs down a lot of what is actually going on behind the scenes. So he's basically referring to the Robinhood app and how they and other trading apps come across as an app which anyone can download and have fun with, when in fact these users probably know very little on average about stocks or fundamentals or how options work. But in reality, this is not being honest to the user about the nature of investing, especially with tools for leverage such as options. And just looking at Robinhood's website, they don't come across as a traditional brokerage might, which, they claim like investing is for everyone or we are all investors. And this has worked well at luring many people to download their app in the past several years. In fact, Robinhood has around 13 million users right now, with an average account balance between $1,000 and $5,000. So not very large accounts. And while it might not seem like a lot of liquidity for brokerage, this still presents a major opportunity for Robinhood to make money. Let's be conservative and assume that the average account size is only 1,000, as this is the lower value that they give. But this would still be over $13 billion of liquidity within the trading app itself. And this liquidity isn't just sitting in a long-term investment. Robinhood users make a lot of trades. In fact, much more than the other brokerages. And just looking at last year during mid-2020, Robinhood reported more monthly trades than the other brokerages, E-Trade and Schwab combined. And these brokerages have a combined user base of 29.6 million for Schwab and 5.2 million for E-Trade. So combined they have 34.8 million users compared to Robinhood's 13 million. And this really comes as no surprise since Robinhood is more used by the high-frequency trading crowd, while these older, more established brokers are used more by a fundamental long-term investor crowd. And this high frequency of trades offers a great ability to profit for Robinhood. And right off the bat you might ask, wait, they have zero commission trades, so how would they make any money off of that? Buying and selling. And on the surface it might not seem that way, but in reality when you buy or sell through Robinhood, they are essentially forwarding your order to buy or sell to another much larger market maker behind them. And this is how they make their profit. This is known as payment for order flow. And Robinhood is reimbursed greatly for this by these other institutions who actually end up executing your order. So let's look at an article that I found that really explained this quite well. Companies like Citadel, Two Sigma, Virtu, etc. have market-making arms that pay massive amounts for order flow from other brokerages, hence the term payment for order flow. This practice originally began with new stock exchanges trying to gain traction and attract customers by paying for volume. It now extends all the way to the brokers, with the practice ironically pioneered by the infamous Robert Madoff. Brokers claim that by selling their orders, execution brokers can handle these orders, or bundle these orders and reduce overall execution cost. This is especially beneficial to small, boutique brokers who do not have the sophistication to execute their own orders. But why would other brokers pay for this right to execute another broker's order? And the answer to why other brokers would pay such a high premium to execute these orders is that with such high frequency trading, as is being done regularly on Robinhood, these large brokers have the possibility to make a mint off of having the ability to fulfill these orders, and this essentially lies in their ability to take a small chunk of the liquidity that is being fulfilled. Let's go back to the article. The theoretical idea behind it is that the traders' orders they are buying are uninformed traders, often retail traders or other ineffective investors who are trading due to some irrational reason and not because they know an asset is misvalued. By purchasing what is expected to be uninformed order flow, our market maker can buy at the bid and sell at the ask with less risk of trading at a loss with an informed trader who knows that the market is mispricing the security. Therefore, market makers who pay for order flow can capture the spread while reducing the risk that the spread is too narrow to adequately compensate them for the risk of loss. The wholesale broker who purchased the order is obligated by the SEC to follow what is known as best execution, which they define as the lowest price, the speediest rate, or the most likely to be completed. Therefore, even with SEC regulation, the language still leaves a lot of room for interpretation. And it's within this room of interpretation that they actually make a lot of their money. So this is the real reason as to why Robinhood and other trading apps are able to offer free zero commission trades. And it's because they can essentially give these orders to the highest bidder who will then make money off of you again. So essentially, instead of paying just your brokerage for your orders, you are now indirectly paying your trading app as well as another brokerage behind them that is actually fulfilling the orders the app sends to them. So this is the real reason why I don't like or use trading apps, and why you don't see me saying, get your 2 free stocks with Webull and Robinhood and sign up down below. Like a bunch of other YouTubers do that. I definitely don't recommend it. One, because I don't need all this free money, and two, I just don't think it would help you. Yeah, you're definitely still paying for the orders you put through the system, and also this kind of zero commission gives Robinhood the legal ability to do something like what they did a couple of weeks ago, where they essentially closed out people's positions in GameStop or AMC or other heavily shorted stocks. And even though they're getting a lot of pushback for doing this, there isn't really anything illegal that they did, because if you aren't paying them directly for the service, they can basically defer your order request to the request from these larger institutions who are actually paying them. They are their real customers, not necessarily this user who is just executing zero commission trades. So bottom line is that, as Burry has warned, this gamification of investing is only helping Wall Street more. It's not actually doing anything that they don't already have control of. So yeah, I hope you guys liked this video. Yeah, I hope to talk about this more, as I really like to talk about overall success in investing and going against the crowd and really questioning crowd thinking mentality. And Michael Burry's a guy who does this quite well. So if you like these kinds of videos, I can encourage you to subscribe, and I hope to see you again.